And when people have confidence in the providers on foot of the regulatory parameters and the law, it's better for everyone.
Hello and welcome to At the Forefront Fintech Conversations. I'm Sam Belden, VP and Head of Content at Forefront, and today I'm joined once again by Ronan Donohue, the founder and managing director of Q4 Capital Advisors, which focuses on providing consulting services for a range of capital markets, banking, and insurance stakeholders. Ronan, welcome back to At the Forefront.
Good to be on.
Absolutely, glad to have you. So in our last conversation with Ronan, we talked about how the banking landscape is being transformed by AI and other emerging technologies. Today, we'll use that same lens to examine another part of the capital markets, the insurance landscape. So today, we'll talk about some of the benefits that AI presents for insurance, some examples that Ronan has seen of successful adoption of AI, and some practical considerations as firms look to map out their AI strategy. Stay tuned to the end as well. Ronan will make a prediction or two for the future of the insurance landscape. So stay tuned for that. But let's start high level. Last time we talked with you, Ronan, we talked about AI's applications for risk management, particularly in a banking context. Tell us what impact this technology is having in the insurance landscape and what might its impact be in the future.
Yeah, well, it's very interesting, Sam. I think insurance companies in particular are really set to gain by the changing landscape. I saw one estimate recently that it will add possibly over $1 trillion rather, US dollars annually to the insurance industry. And I think the thing they're most excited about is data. You hear a lot about that, but with the connectivity, the hyperconnectivity of people having smartphones, having smart speakers in their home, all kinds of devices that give off information, the insurance industry believes it can use this to better assess risk, to have a better understanding of, if they can better assess risk, they can better fix the price tailored to the risk, and you, the consumer, should get a better deal. Now, at the same time as that, we all know fraud is on the rise. We've seen hacking of every major site, be it medical or government or whatever. And whilst the insurance industry admits that the advances in technology also enable malicious actors to hack and undermine the system, it also helps them detect it. So the more data you have, it's easier to detect suspicious activity, fake accounts, other things that could undermine it. So if you take the two together, what I'm hearing is that we're kind of moving from the old model, which was detect and repair after the accident happened or whatever, to predict and prevent. And these models, powered by advances in data, will be better able to predict everything from weather patterns to road collisions to flight delays, and that then will make for a more streamlined system. That's the view.
Fantastic. No, I appreciate that overview. And when you corrected yourself and said adding $1 trillion to the entire industry, my eyes, I think you probably saw widened a little bit. I mean, the potential is obviously vast here, and it makes sense because obviously assessing risk is a core function of insurance, and one where the potential is fascinating, I think, to most people because of the analytical potential of AI, how consequential those decisions are. But obviously, the insurance value chain is broader than assessing risk alone. What are some other benefits of AI sort of across the insurance function that you see more broadly?
Well, I mean, if we just look at the value chain, from first principles, it's interesting. We only use the word trillion when we're talking about GDP of countries mostly. But if anything, I think it's underestimated because nearly more so than banking, wherever you look, insurance companies set to gain from these advances. So I go back to risk briefly. They have to insure self-driving cars. they have to ensure in the future robotics that are operating on humans. There will come a time when that is happening. How do they set the premium for things like that? A machine going wrong. Again, it's data. It's going back to assessing granular data and processing it to inform themselves how to tailor it. And it's basically an avalanche of new data is coming. That's what I'm hearing, which comes from, as I mentioned, the growth in connected devices. But also, if they get better in analyzing the data and in processing it, then underwriting, which is the process whereby insurance companies assess the risk, is going to be quicker. I mean, if you wanted to get insurance on a complex risk now, you would be waiting. We all know you can call up various hotlines and get travel insurance on the phone. But if you were looking to insure, as I say, a robotic surgical instrument in the future, that doesn't sound like it would take very long, other than at some point it could be done very quickly. And that would be a real game changer. And if you add to that advances in smart contracts, in blockchain technology that would allow the turnaround on policies and payouts to be quicker, then you have a value chain that's customer friendly, has to be cheaper, and much more tailored to the needs of individuals. So, for example, wouldn't it be nice to just have your car insured when you're driving it, not when it's sitting in the driveway? You might want it insured for theft, but wouldn't that be a smart way to get motor premiums down if the insurance company knew when you're driving it, the route you're taking? If it's on an open motorway, it might be less risky than going through busy traffic in a large city. And these kinds of things are coming to pass, and I think it'll be hugely helpful.
Fantastic. No, that's great. And when you gave that example of, like, wouldn't it be nice if the insurance company knew when and how you were driving your car? My initial reaction to that is that I know some people might not want their insurer to have that information, but when you frame it the way that you did and talk about the benefits that consumers can actually have when things are conducted that way, I think that conversation will likely shift over the next 10, 20 years, and people will get a lot more comfortable with that sort of application of technology. So appreciate that you brought that up. Looking across all of the different areas that you've brought up, have you seen any specific examples of firms or teams that have undertaken a successful adoption of AI for insurance? Any success stories that you're able to share? Just I think some examples would be valuable for our listeners.
Yeah, I had a look, and I mean, I think we touched on the last time I was on. I mentioned a startup insurance company using blockchain technology that was set up for travel insurance, whereby if the flight was delayed, you wouldn't have to inform them. It would already feed into a database that would tell it the flight's delayed, and it would have your payment details, and whatever is the compensation for that will go straight to your bank account. And that's it's what we call a monoline insurer. They specialize just in one thing. This was a startup in travel. But I looked at an example of one of the world's largest insurance companies, also a big European company, Allianz, for example. And Allianz are talking about that's actually where the $1 trillion figure came from. It's their assessment, but I think it could even be conservative. So they cite a bunch of things, but one of the things that caught my eye was, say, a weather alert tool. So you're thinking hurricanes, you're thinking the sort of things that can really cost insurance industries. But the research showed them that if they alert you, and perhaps it's by way of an app, I mean, they didn't go through that as such. Their research tells them that people are much more likely to batten down the hatches, to take remedial measures, to cover glass objects, whatever it might be, and then the loss given the hurricane is less. So it's a prompt, quite simple, but they have in a lot of users they suggest, and I think they've 1.9 million registered customers at the moment. You figure it can only rise. So if you know there's a weather event coming, you can take measures. And that sounds fairly simple, but that's just an example. And it's all about the reach. It's about getting people signed up to it, and then again, you have to figure if the insurance company is experiencing lower losses, then you get lower premiums. Funnily, we were mentioning motor. They have something they talk about, whether it could be a tag on your windshield or via sensors in the car or on your smartphone. And right now, I think they have 40,000 active users. Again, it could grow, but it provides a first notification of loss. So if you do tip someone from behind in busy traffic, they automatically know. They can alert you as to where the nearest dealerships are to get repairs done. They liaise with both sides. The entire operation is kind of, I mean, it's always a little bit traumatizing, however small the accident, this has happened. And they're saying that they could set and train all of the remedials right away. Now, I suspect, going to your earlier point about privacy, because I can totally understand why people would want to embrace that, you'll probably end up with two premiums. They say, we'll insure your car for, let's just say, $500 standard, but if you want to put a tag in it, we'll do it for $3. And you know what I mean? That's when people will have to put a price on their privacy. And I get it. It won't be obligatory, but you might decide that, yeah, it's worth it. So that's one to watch. And they go on to talk about the claims process being easier, fraud detection being better. And I think, whilst we spoke about the monoline insurance companies specializing in travel, I think these big players, they're on it. They see the advantage, maybe even more so than banks. They see that number. The insurance companies are already very good at assessing risk, analyzing data. That kind of goes to the core of what they do. So they're, I think, enthusiastic, embracers of this coming technology. But there's many things on the road that can slow this up. It's the direction of travel we want to get clear, and I think it's in this direction. But just because it doesn't happen next week doesn't mean it's not coming.
Right. Now that makes sense. Appreciate those examples. I think that they show how AI promises to offer benefits for all stakeholders in the ecosystem. The fact that obviously insurance companies can do their jobs better, but at the consumer level, preparing more effectively for natural disasters, getting to make that choice about, do you want to save some money or do you want to keep your privacy? So I think that this sense of how it's not just a business benefit, it's making consumers' lives better in a way that they've kind of seen with consumer technology and things of that nature. Interesting to hear how that applies to insurance as well.
Sure.
So appreciate that. Sticking with that theme, for firms that want to be the next great example of a successful AI adoption, what are some regulatory considerations that they should have? Are there timing factors, maybe practical considerations they could keep in mind when mapping out their strategy? What comes to mind there?
Yeah, quite a lot, Sam. I mean, insurance companies are already highly regulated, as are banks, as financial institutions. The one that comes to mind most immediately on my side of the pond, but it impacts global insurers indirectly, is the EU AI Act. This just was passed by the European Parliament this year and was rubber stamped in May. Now, this is a pretty comprehensive piece of legislation that, for the very first time, in fact, as I understand it, it's the first piece of legislation globally that is sought to define AI in legal speak, which you can imagine all kinds of discussions that opens up.
Right.
But what they've identified, and I think this is where consumers concerned about privacy and other things will take some comfort. The EU has always been big on this. They've identified 4 risk categories for anyone whose business relies on AI applications. So the categories are unacceptable, high, limited, and minimal. And there's different requirements for each. Now, many financial institutions were identified in the high category. And so for that, they set out stringent technical and compliance standards. Now, that would be everything from ring fencing databases, for ensuring that the algorithms that are accepting or denying insurance risk are not discriminating on the basis of race or sex, religion, whatever it may be. they have to ensure that these things are programmed to, treat all customers fairly, and to put in place firewalls and other things to make sure the data is not misused or transferred where it shouldn't be. Obviously, it's new legislation. We haven't seen how it all works. But if I were in an insurance company now looking to, in the regulatory space within an insurance company, this is a piece of legislation I'd be sitting up straight on, because it really covers everything that they're looking to do. However, I think they probably, I think they will embrace it. I think all marketplaces are better when they're orderly. And when people have confidence in the providers on foot of the regulatory parameters and the law, it's better for everyone. And it is a new space, so I think it can only give comfort. And at the end of the day, if you've got a responsible operation, you shouldn't have to worry about these. Finally, I think AI will play a strong role for both the regulator and the insurer in monitoring and reporting. So the insurance company will have to satisfy the regulator that it's adhering to all of these things, and that's got to be easier. It's a data management process in the end of the day for them. And of course, the regulator staying on top on the various strands of their business and the changes, it should be easier. So I think that's probably the biggest, but there are others. It's a complex area.
Fantastic. I love that last point you made about bringing regulators and the regulated closer together, increasing efficiency for both sides. And in theory,
Sure.
that should lead to more effective oversight of this industry down the line. So
Correct.
appreciate that
Correct.
point. Yeah. Great. Well, we'll see how all of that plays out. Sticking with that sort of future theme, what's one prediction that you have for the future of insurance? It can be AI related, or if it's outside of that, happy to hear that as well.
Well, I mean, the overriding prediction, because I've always found insurance a bit of a difficult, as a consumer, a bit of a difficult purchase. It's a difficult service to deal with, unlike so many other things, because we all know that at the point of sale, it's all very friendly and quick, but to go through a claims process, I once had my car stolen. I had to go through this process. I've unhappy memories even now, over 10 years later. It was so complicated. So I think the overriding thing is that there will be better customer service. I hear a lot about, for example, if the insurance companies, an awful lot of people who call their helplines have very basic questions. For example, am I covered for winter sports on this policy? What is the termination date of my policy? I've forgotten. Is my whole family covered or just me? And so on. All of those fairly straightforward questions can be swept to bots that are powered by smart technology. And actually, I'm even noticing now chatbots are getting a lot better in all services. And then the people who need to make the phone call on complex insurance needs, let's go back to robotics or something, then they can pick up quicker and their call centers can be more efficient. So there might come a day when the public face of insurance is very friendly, but so is the back end. If you have a claim, it's settled quickly, fairly, and direct to your bank account. So they should be able to take most of the headache out of the pressure points people see. As to the really specific one, I'm genuinely looking forward to the motor one if it ever comes to pass. We happen to very privileged to be a two-car family, but I never get to drive mine, so it's sitting there, and I have to pay insurance for a lot of time. It's doing nothing, and so yeah, let's see. There'll be other examples I think people will have and look forward to.
Fantastic. Insofar as, technologies like AI and blockchain can make the claims process easier, save people money, I think that people will be eager for their insurers to embrace these technologies. So
Yeah.
that all makes sense. Awesome. Well, Ronan, I want to thank you for your time and insights today. Today, we talked about some of the key potential applications of AI in insurance, some use case examples, key considerations and predictions for the road ahead. So if you'd like to learn more about Ronan's business or see more insights from him along these lines, you could head over to q4capitaladvisors.com, Or to hear more about what Forefront does and see more episodes like this one, you can go to forefrontcoms.com. That's comms with 2 M's. Go over to the news and insights section and check out a full episode archive of At the Forefront. So until next time, this has been At the Forefront. Ronan, thank you again.
Thank you, Sam.